Stephen McClurg, thank you very much for joining us here in studio.
Thanks so much for having me, Talia.
Absolutely. So the last time we spoke, you were the CIO of the asset management firm Valkyrie, and we spoke in person back at the end of 2023, and that's right before the SEC gave the green light for spot Bitcoin ETFs. At the time, you said you were optimistic they will in fact get approved by the SEC, and sure enough, you were right. Well, now you're the CEO of the investment firm Canary Capital, and so I'm wondering, you have all these applications now with the SEC for spot crypto ETFs tied to altcoins, including XRP and Litecoin. So I know you can't talk about these specific filings, but what do you think happens with those filings in general, with those spot crypto ETFs tied to altcoins?
Well, the SEC has been working very closely with the exchanges, NASDAQ, CBOE, New York Stock Exchange, over the last 6 months to create a generic listing standard. And that got published in the last week. So what the generic listing standard will do is give at least some standards so that you don't have to go through an entire process like we did with Bitcoin, with other cryptocurrencies. That generic listing standard largely looks at futures. And does this token have a futures market in the US or not? And that's one of the qualifications. There's several other qualifications that also apply to other commodities. But if you look at what's proposed and what's public, it's still in the 21-day comment period. But once that's over, we do expect to see a lot of altcoins launching probably in September, October.
Now, you also have applications pending with the SEC for staked crypto ETFs, including the staked Tron ETF. So I'm wondering, what was the reasoning behind applying for those products, specifically the staked portion?
Absolutely. Well, my background is in fixed income, so I understand yield more than I understand anything. So one of the things that I wanted to do was create ETFs where you can actually generate yield and then distribute that yield. That yield is very valuable. So for instance, when ETH was launched a year ago and approved for ETFs, it did not have staking. And if I can buy ETH on an exchange like Gemini or BitGo or Crypto.com, I can get a 3% yield on my ETH. But if I buy an ETF, I don't get a yield. So that's income that's lost. So my purpose was to file for ETFs for tokens that you can validate and get a yield on and then distribute that yield to the end client.
So obviously all these filings are taking place amid a backdrop of a more crypto-friendly administration and SEC. So I'm wondering, did that play a role in your decision to put in these applications specifically now? And what do you think has changed overall for crypto since we saw this new administration go into office?
Yeah, so we actually launched Canary in September of last year,
right,
and began working on ETFs right after that. And you know, we filed in October before the election, but that was sort of a not necessarily a free option, but an option on him winning and a change of administration and a change of the SEC. So of course, when after the election, things really went in a positive direction. Crypto in general went to all-time highs post-election, and also in the inauguration was an all-time high for Bitcoin as well. So most of the promises made in crypto have been kept. I think some of them are still being worked on from existing laws, but we have a stablecoin bill that just got passed, which I think is great. We have a framework that the SEC has been working on. We have the generic listing standards, which the SEC has been working on. And it overall has been a very positive vibe in this ecosystem, as well as the way prices have managed to move up higher as well.
And we'll talk more about those regulatory advancements for crypto here in the US in just a bit. But when you were the CIO of Valkyrie, Valkyrie was actually acquired by CoinShares, the ETF business was, and crypto ETFs, big focus for you at Valkyrie. Now at Canary Capital, it seems to me like crypto ETFs are also a focus for you. Is that a fair statement?
Yeah, it is. It's a big part of our business, and was a big part of our business as Valkyrie as well. I fell into ETFs accidentally, and I haven't been able to get away from them. So,
clearly.
but my background is actually active management of hedge funds. So that's what I did in fixed income, and then I fell into ETFs. We also ran hedge funds at Valkyrie. We had run a hedge fund at Canary, and that's actually the first product we launched was a hedge fund for Canary.
Interesting. Now, going back to the SEC, just last week, the SEC voted to approve orders to allow in-kind creations and redemptions by authorized participants for crypto ETFs. So I'm wondering what changed, if anything, for crypto ETFs with this development?
Well, that should have been available all along. Most ETFs have both in-kind and cash creates and redemptions, but they limited it under Gary Gensler. The SEC limited to only cash. That actually prevents you from taking advantage of all of the tax benefits of an ETF if you're depositing in kind or taking redemptions in kind. But now with this new administration, they're opening that up. Now, APs still have an issue. So not all authorized participants will be handling in-kind creates. They'll still primarily only want to do cash just because they don't have the functionality to handle crypto. Some do though. So we do expect to fully see a lot more people probably redeem out of some of the products that exist on a non-tax basis, and even, you know, put Bitcoin and other cryptocurrencies in on a non-tax basis.
Going back to crypto regulation here in the US, you mentioned the Genius Act stablecoin regulation bill, which is now law in the US. Many in the industry have categorized the development as a watershed moment for the industry. How would you categorize the development, and what do you think changes for crypto now that this is in fact law?
Yeah, so I've always viewed stablecoins as an instrument that could fall under the category of money market mutual funds, which means that they are not a registered instrument, but what they've mostly done to avoid that is distribute the yield that you get from the underlying bonds. So if you think about what a money market mutual fund is, it's a mutual fund, a 40 Act, that holds treasuries and other fixed income instruments that produce a yield, and then they deliver that yield. What stablecoins have done is they've held those money market instruments without distributing the yield. And it's really been in a gray area, but what this law has done is define what the gray area used to be, so that stablecoins can now be used as money, but it also prevents you from distributing the yield made off of that stablecoin, because that would clearly become a security or a registered investment company or 40 Act.
So what's the focus for you now in terms of regulatory advancements for crypto in the US? The Clarity Act is now moving to the Senate. The Clarity Act essentially establishes rules of the road for crypto. Do you think, as it stands in its current form, that the Clarity Act will in fact get passed by the Senate? What do you think happens there? And if it does get passed, what will change for crypto?
Yeah, I think it's really important for something to get passed. I frankly don't care what it is, as long as there's certainty, because as long as there's certainty, then you can work around the rules, right? And I don't mean work around them, but I mean you can work within the confines of the rules. So I do think that something will get passed. It may not make everybody happy, but anything that gets passed would make me happy because of the clarity that's involved. But the most important thing that I want to see passed is currently Senator Lomas has a bill that she's sponsoring that would make de minimis transactions in Bitcoin non-taxable. So if you're, say, going to PubKey and spending, you know, $20 on a burger, you can use your Bitcoin and you won't get taxed on that spend. So the current bill that she has proposed is anything under $300 up to a $5,000 cap. The Trump administration is looking at a $600 de minimis transaction increase. I like $600 because I think that's, you know, that would be really important. But what's most interesting about this bill is it will allow people to start transacting in Bitcoin more and using it for what it was meant to be, which is electronic cash.
Interesting. Now, let's turn to markets. That's definitely your forte. Bitcoin, you mentioned, reached new all-time highs this year, just last month, a new record, over $123,000. What do you think were some of the factors that helped catapult Bitcoin to that new record? And what's your outlook for the second half of the year? Do you anticipate that Bitcoin could in fact surpass that new all-time high? And if so, what would it take?
Sure. Well, A lot of the action in Bitcoin has to do with ETF inflows,
Right.
which has to do with advisors and institutions completing their due diligence, seeing an ETF in the market for over a year, and then making allocations. And we're seeing large allocations coming in, not just from small institutions, but from large sovereign wealth funds. We're seeing insurance companies come to us asking questions. They're going to be the slowest, but we're answering those questions for them. Pensions, endowments. I've spoken to several endowments. They were really the first ones to get into Bitcoin out of all the institutions. But insurance will be last. But we are seeing a lot of flows coming from sovereigns. That is very important, and these inflows are creating higher price in Bitcoin. We're also seeing treasury companies come into play. Now, I think that those will probably peak out here in the next couple of months, but the treasury companies are buying a lot of Bitcoin and a lot of other assets, and that's really what's driving price. As far as where price will go, I think there's greater than 50% chance that Bitcoin goes to 140 to 150 range this year before we see another bear market next year.
Oh, wow. You think we're going to have another bear market
I do.
next year?
I think it's going to be bear market across the board. I don't like the economic standing at all right now.
What do you think will contribute to that bear market? Fed policy, other macroeconomic factors?
Well, first of all, Fed policy, the Fed should have been lowering rates over the last two sessions, and they haven't. But I do expect the Fed to lower rates in September and October as well. Probably 25 basis point each move. I think 75 is really where it should be before the end of the year, but I doubt that we get that. I think it's going to be about 50 basis points. That being said, that's what will propel Bitcoin up to 150 is easier monetary policy. And we're already seeing other countries increase the size of their central bank balance sheets, lowering rates, and that's contributing to global M2 monetary supply, which is driving the price of Bitcoin and other assets up, other risk assets. But when the US does the same, it will certainly contribute. But then Fed policy will likely stop as far as easing, and then we'll probably see other things go down. But not just crypto, but also the broad economy. What I'm really focused on is debt right now. So student loan debt is the highest it's ever been. Student loan defaults are actually higher than it was in 2009. Credit card defaults are higher than it was. Mortgage defaults. So we're starting to see a credit crunch for consumers right now. And that credit crunch is certainly going to lead to lower consumer demand, lower consumer confidence, and probably lower GDP.
It certainly will be very interesting to see what happens in that regard. But earlier you mentioned treasury strategies. We're seeing a lot of that, and it seems to me like Ether is getting a lot of the attention these days, maybe even more than Bitcoin. In fact, we're seeing a lot of publicly traded companies shift their entire treasury strategies to Ether. What do you think about that shift?
I'm not a big fan of Ethereum only because it is an older technology and there's a lot of other protocols that have come in that are faster, that are cheaper to transact, that are fundamentally more secure. And I think it had a great run over about a 5-year period, and now other protocols have taken over. So I do think it's outdated technology. A lot of the market is moving towards Ether because of the ETH ETFs, but I do expect it to wane and not see all-time highs.
And Canary Capital does not have a spot Ether ETF, no application for a spot Ether ETF. But interestingly enough, you do have an application for Litecoin. Why Litecoin?
Well, Litecoin's really interesting because Charlie Lee, the founder of Litecoin, came back to the foundation about 2 years ago and has been working very hard to update the code and to make it a very viable network. So I see Litecoin as the silver to Bitcoin's gold. It always has been, but now it's coming back around for that. They're also doing really interesting things on ordinals, which were tried on Bitcoin, but it clogged up the network too much. Litecoin has the ability to process ordinals a lot faster, which is essentially digital art. So I do expect Litecoin to come back in a major way and to be used for smaller transactions, where Bitcoin is a little bit more difficult to use fast in smaller transactions.
Turning back to markets, so obviously you gave us your long-term vision, But in the short term, August got off to a rocky start amid weak economic data and more tariff-related headlines from President Trump. So what do you think happens there? I know Canary Capital came out with a note, and you said that a wild card for renewed bullish momentum could come from a surge in ETF inflows or continued accumulation by the growing number of BTC treasury companies, which you also mentioned here today. So do you think the way we started off August will sort of reverse course, or do you think we'll see a continuation as we round out the summer into how August essentially kicked off?
Yeah, look, August is historically a bad month for any risk asset, especially cryptocurrencies. Most of what happens is in May, there's usually a small peak, and then of course sell in May and go away kicks in, and people take off for the summer. They're not as interested. There's not as much volume, and markets can move very, in a very volatile fashion on very low volume, and that's exactly what August is. It's a dead month for crypto, and September and October are usually very strong.
Stephen McClurg, thank you very much for joining us here in studio. Such a pleasure speaking with you.
Thanks for having me as always, Talia.